For those that don't know, Tony Robbins is a famous life strategist.
New York Times best-selling author and life and business strategist, Tony Robbins.
You do the same thing. If you plant the same seeds, you reap the same rewards.
In more recent years, Tony has broken into the world of financial information. Does Tony Robbins' information have the groundbreaking insights you are going to need in order to retire comfortably, achieve a greater level of financial security, or even potentially boost your investment success? For me, I discovered Tony Robbins' original work called Personal Power when I was back in college. And I know some people have different views on Tony Robbins, but for me, his insights and packaged information had a positive impact on my life and my life direction. In Tony's new financial trilogy of books, Tony claims to reveal the secrets of the wealthy that were obtained in these interviews with billionaire financial moguls like Ray Dalio, Warren Buffett, and Paul Tudor Jones. Today we'll be breaking down the critical ideas for you, whether you're starting out or looking to refine your financial plan. Stick around as I'll reveal some of the secrets that could change your financial future. Let's jump in. In Tony's first book, Money Master the Game, it's all about laying the groundwork for lasting financial freedom in the future. At its core, the book champions the concept of overcoming behavioral tendencies and the power of compound interest over time. And for those that are not automatically contributing to their investments or an investment account where someone is working to automate it for you, this can potentially be a life-changing idea. Robbins explains that by setting up a system where even small regular contributions are made, you can harness the magic of compound interest over time, transforming even a modest amount of savings into potentially significant wealth. Remember the inspirational story of someone who worked for USPS? Well, in this book, it has examples like this. Tony talks about how one guy was working at USPS and even on a modest income was able to save a fixed percentage of his paycheck automatically, and over time, that simple discipline turned him into a multi-millionaire. This example illustrates that you don't have to have just this massive income in order to become wealthy. Consistency and patience are key. Additional key points covered in this first book were the importance of cost awareness in your investments. Tony warns that there are financial products that have significantly higher fees than others, sometimes as much as 2.5% to 3% on certain mutual funds, variable annuities, or maybe even in a 401k plan that's poorly set up. This can erode your returns, and so he advocates for using low-cost funds to help you keep more of your money working for you. In addition to this, Tony talks about advisor selection. This is a critical decision that can impact your financial future, and it's important to choose a fiduciary who is required to act in your best interest versus a commission-based broker whose incentives may not align with your long-term goals. Building on the foundations from the first book, the second book is titled Unshakeable. And this takes things a step further, talking big picture wealth management points. And it's a little bit more elevated than the first book. Highlights of the second book, Unshakeable, include the importance of resilience and how the power of knowledge can impact your success as an investor. If you're aware of market cycles and how things are going up and down at different points, you're more likely to make rational decisions at some of these emotionally significant points in the market. Tony also emphasizes the importance of constructing a portfolio that spans different asset classes, including international exposure and smaller companies, as opposed to just being locked into the S&P 500. The book also touches concepts that are very much intertwined with your investment success, and this includes tax and estate planning. A significant addition to this book is the discussion of tax strategy. Tony talks about some of the elementary points in tax planning, such as being aware of how your own state influences your tax considerations and the difference between short and long-term capital gains, and how strategic strategic awareness of some of these points can boost your results over time. The third book was The Holy Grail of Investing. I think this book is great for people who have already nailed the basics. If you're looking to potentially take it up a notch with a little bit more financial experience under your belt, this book is centered around the concept of alternative investments, areas that were once exclusive to the ultra wealthy, which are now more accessible than before. Tony talks about the Holy Grail of investing, which is, according to hedge fund manager Ray Dalio, is multiple diversified, uncorrelated bets in your investment portfolio. Most investors limit themselves just to stocks and bonds without considering potential asset classes such as private equity, private credit, sports team investing, venture capital, all of which are traditionally reserved for the wealthiest of Americans but are now more accessible. Tony presents a case for why people who are accredited investors can potentially consider these and maybe even boost their results in their portfolio. It's important to consider that Tony is clear in this book that there's still a lot of risks to consider and even greater due diligence burden in this areas. So it's essential to consider the trade-offs that you face when investing in private markets with lower levels of liquidity and higher fees. But there may be a good justification with those trade-offs for having some exposure. So that's the trilogy. And here's my takeaways from the three books. First, Tony emphasizes how important it is to choose a good advisor. He talks about fiduciary advisors versus commission-based advisors. A comprehensive plan is very different from a advisor who just monitors a portion of your investments. One of the biggest mistakes that I see is people just having this generic plan that doesn't address taxes, retirement objectives, disciplined cash flow management, nuanced employer financial benefits or equity compensation, or other outside investments from what the advisor is really looking after. A plan that lacks this comprehensive level of diligence in these areas may miss out on significant financial planning opportunities that could be worth potentially as much as $100,000 or more to the client. So not only should you make sure that you're having advice from a fiduciary advisor who's working in your best interest, but you should also be getting the most value out of that relationship by ensuring your wealth manager is providing a holistic view that includes personalized tax planning, potentially alternative investments if that's appropriate, in contrast to commission-based brokers that may be focused specifically on selling certain products that don't necessarily align with your goals, or even fiduciaries that limit the scope of their work so that you may get the impression that everything's good when in fact they're not even looking at a lot of potentially untapped planning opportunities. The second big insight was the importance of due diligence on your alternative investments. So AI or alternative investments represent significant potential but also significant risks, and a lot of AI investments are garbage. I've reviewed dozens of pitch decks, and so it's important not to let the exclusivity of a certain investment opportunity draw you in. There's certainly a compelling case for private equity. On average, private equity has done really well, and for people that have over $1 million of investment assets, they should consider what's the appropriate level of private investments in their portfolio. In my view, there people that are interested in alternative investments are often trying to look for some quick fix or super returns, which may make them vulnerable, missing foundational points in creating a long-term successful wealth management plan, and may even open them up to being lured in by advertisements that are biased about benefits without necessarily considering all the risks or downside. So whether it's private equity, venture capital, just make sure you really are working with someone who understands the research and track records, audit standards, and the unique characteristics of each asset to avoid any pitfalls as you're starting to consider this new area of investing. The high return potential is promising, but it's not without significant trade-offs to be considered. Lastly, strategic tax planning. Integrating tax planning into your overall financial strategy, I feel, is a game changer. I like that Tony talked about tax planning in his book Unshakeable, but I really think he was just scratching the surface when he was discussing some of the tax planning in his book. As people get closer to retirement, taxes represent a significant area of planning opportunity. Understanding when to hold an investment for favorable tax treatment, and knowing the benefits of strategic Roth conversions, and considering the impact of state taxes can all contribute to significantly better financial outcomes. Working with someone or developing your own knowledge in taxes is definitely a worthwhile investment. Tony's Financial Trilogy in Sum provides a pretty good roadmap, establishing disciplined automatic savings routines, building a diversified portfolio, planning thoughtfully with taxes, and exploring the potential alternative investment landscape are all areas that are pretty significant in developing a financial plan. Thanks for watching. If you found this insight helpful, please check out our video below about how financial planning strategies can potentially add 100, 200,000 or more to your overall financial future, and follow along for future videos ahead. Let's keep building that financial plan together.